Well, yesterday was another interesting day on Wall Street, but this time the market couldn't quite agree on a direction. Hey everyone, it's Wednesday morning, June 17th, and welcome back to Capital Markets Quickie. I'm your host, Endrit Sella, here to break down yesterday's market action in just 2 minutes. Quick note before we dive in. Today's episode is brought to you by AMF Capital, Asset Management Frankfurt. Learn more about our funds and strategies at amf-capital.de. Alright, let's get started. The Dow Jones Industrial Average climbed about 0.6% and reached another record high as investors continue to celebrate the recent peace agreement between the United States and Iran. But the broader market wasn't quite as enthusiastic. The Standard & Poor's 500 slipped around 0.6%, while the Nasdaq Composite fell roughly 1.1%. Now, the big question yesterday was whether the Strait of Hormuz can actually reopen as quickly as officials hope. While the agreement suggests commercial shipping could resume by Friday, experts warned that getting oil flows fully back to normal could take much longer. That uncertainty kept investors cautious throughout the session. At the same time, all eyes were on the Federal Reserve. Policymakers kicked off their June meeting yesterday, and investors are now waiting for today's interest rate decision. Most expect rates to remain unchanged, but the real focus is whether the Fed signals a more aggressive stance on inflation later this year. Adding to the global picture, the Bank of Japan raised interest rates to their highest level in more than 3 decades as policymakers respond to rising price pressures. And finally, SpaceX continued its remarkable post-IPO run. Shares moved higher for a third straight day, and the company briefly surpassed Amazon in market value, showing that investor enthusiasm around Elon Musk's latest venture remains extremely strong. Alright, that's it for today's Capital Markets Quickie. If you found this helpful, hit subscribe and stay in the loop. See you tomorrow morning.